Good morning, traders. Captain Jim James here with your daily brief for Tuesday, August 17th, 2021. Today we have a big economic calendar. We've got retail sales at 8:30. Then we have the home builders at 10 a.m. And we have J-Pow talking to students, I believe, at 1 p.m. These are the opportunities that the bears are going to try to use to drop this market. So you've got a full calendar ahead of yourself. Big news from yesterday really was that there will be no tapering until 2022. The implication from that involves the symposium in Wyoming next week that begins on the 26th or 27th, whatever that Friday is. That announcement yesterday should remove any kind of taper talk or volatility heading into next weekend. It also opens the doors for the bulls to take this market higher, but it might also make it a sell the news event heading into next Friday's symposium. So we are working on some deadlines here. We've got a full economic calendar this week. We have OPEX on Friday. Then we have the symposium next weekend. We also have to deal with the seasonality of the market selling off coming into September and October. Moving on to ES, get this chart a little bit closer for you for the daily. And you can't see it on this chart, but right here, this is the Friday into the weekend gap that needed to get filled. And so we came up and closed up here yesterday at new all-time highs, 44.7650. And we sold off into the overnight to close this gap over here, which we wound up doing. You'll also see these levels that I have in here. You've got 44.59, 4447, 4435.25, 4416.25, and the nice round number of 4400 down below. Now, you know that bears went short here into the close yesterday. This is the point right here. When we come back to retest this today, this will be where the bears hold the line. If we break through this line, you're going to see another squeeze heading on up, okay? Be conscious of this. Today, in pre-market, in the beginning of the day, you're going to see the bears try to bust through these support lines that the bulls have. These are a bull's best friend today, and we can use these as a bull for weak attempts by the bears to try to break through. If they try to break through once, twice, three times, we can grab that second or third and run it up, right? So be conscious of these support lines to play this afternoon. There is a fair chance today that we do some more consolidation. We work within a sideways trading pattern today, but you are looking for weakness for the bulls at that 8:30, 10 a.m. and 1:30 or 1 p.m. time frame today. I think we even have a Fed guy talking at 3:30 or so that might bring some doom and gloom. Also keep in mind that today is Turnaround Tuesday. We were green yesterday, and with us being green, it is expected that today will be a down day. It is important, though, that we do not give up these supports as the day moves forward, because the bears' plan would be to break through these supports and take it down at least to 4,400. I think they'd be satisfied at this point with getting it this low, though I do find it hard to believe that they get this red today. So look for either playing off these supports or wherever we wind up by end of day, going long into Wednesday and Thursday. There is another issue, and that would be I was looking at the options chains yesterday, and there are a lot of calls out there still from yesterday. The market makers are going to want to burn those calls today if they can, and not print and pay the large amount of Friday puts that are out there. So what they can do is they can kind of make us burn sideways. That would kill your Wednesday options for the 18th, and then they'll allow the market to move in the direction that it wants to go. So my idea for today is that we're going to trade down a little bit and trade within a box. There is, though, always the threat of trading down below that sideways movement on bad news or trading above on good news today, finding some strength at some point before the end of the day. So my call for today would be no lower than 44.35.25 and no higher than 4476.50. Get your own support lines on your charts today and play off these charts. You're looking for failures to break through on 2 or 3 attempts to ride ES or SPY right back up. If we do get some strength, if they let's say they get deep down in here today, if they get down deep to the 4400 or 4416, that is an area of value for bulls. You will see a strong reaction down at these levels, and if we do get down here, I would expect a rip to all-time highs once again. Let's move on to NQ. And nothing about NQ surprises me this week. You had this nice dip down below yesterday on Monday. We rode it right back up to resistance above. I don't really think that the banks really care about NQ as much as exiting the positions over the next 2 to 3 weeks. So they'll sell it down, bring it back up, and sell down out of their positions that they have into September. Now we've got OPEX here on Friday the 20th, and right where this wedge ends is on the 27th of August. This is exactly when that symposium in Wyoming begins. So my expectation would be that we trade within this wedge pattern here over the coming weeks. If you are long as a bull in this market and expect us to go higher, it's going to be a challenge because we have sellers hiding above these levels up in here. We've got sellers hiding here at 15. For right now, it's at 15,132, 15,156, and 15,175. Is there a chance that we have a strong reaction as we get closer and maybe one day push much higher? Yes, we do. I'm not anticipating, though, Nasdaq to remain in strength heading into this August 27th date. This Nasdaq only needs to stay up long enough for bulls that have been involved in the SPY since June 19th without a big payout to get those prints that they're looking for. So if you're a theta trader or if you like the action of trading within a defined space, this is a pretty good place for you to be. Moving on to RTY, the Russell. Take a look at this one. And this one, yesterday I posted on Twitter saying that I didn't trust yesterday's recovery in the rut. And there's a reason for that because there's a larger wedge at play in here. And we did sell off yesterday, and now we've got a fishing expedition heading even lower. If you remember from my video, I'll let you know that these are two pretty big, medium-sized support areas here for the rut. I don't expect it to reclaim anything up in here or break any higher. I do expect that on this larger wedge that we're going to trade down to the support of 2141, trade back up, maybe possibly into OPEX, or let's say we trade down here into OPEX on the 20th, and then some new positions are taken to come back up here, and in here, and eventually fall off to September 15th. Now, one area of concern is how deep do we sell off in IWM and the timing. I really do believe that we start to get really bearish and possibly pull it down to the 2100 level or even slightly deeper. You could possibly even see it come down to this 2000 heading all the way over to the 15th of September. Now, the thing to keep in mind is that I would expect the Russell to sell off sooner than NQ or ES and recover sooner. I think that it's going to take some time for the SPY, for NDX to completely take their cards off the table. Give it like 2 months, September and October. IWM, on the other hand, will gain strength sooner than those other two indexes. So you want to be tracking these levels down here as we move into mid-September to get long once again. Now, this fishing expedition, I don't think that IWM actually burns. You're going to see a strong reaction here. This is a place for you to get long once again and play it up here to this same area of resistance above. And there is a possibility that we trade sideways in IWM from now until, let's call it Friday, and then we do a steep sell-off into the close on Friday, down below to this 21.43. Tesla is showing some signs of recovery this morning. Now, the areas of value in Tesla are down below here at 663.30, 637.57. Now, there are trapped buyers now stuck up inside of this area up in here, right? We've got longs that are trapped. What normally I would say that in this area down here, you'd let this sell off into Friday and grab more new calls to make another run into next week. We don't really have a lot of time between now and the 27th for Tesla. Is it possible it gets extended into beginning of September? Sure. But we want to think about these trapped buyers up in here and what we need to push all the way up. And what we need is some of these big banks and institutions, or a giant whale maybe from Japan or something, to step in and not really care about these hidden sellers. Because from now until Friday, anytime we come up to this 700 level, 699.02 level, or even up to this 720, let's call it just a flat 720, these buyers are going to want to exit. They're going to tell you that they're going to want to stay long, but they will do whatever they can to get out of these bad positions. So hope for a whale to push us up to 740, 750 today. If that doesn't happen in the next couple days, if we start trading sideways, the clock will be ticking for OPEX on Friday to sell this down. Now, because it is OPEX, there is a chance that the whale will step in and push us much higher and take us to that 740 level, but it is looking more and more like we have some weakness down to this 665 and possibly even 637 heading into Friday. Good luck trading today, all of you. Find me on Twitter if you have any questions about where I'm at on the market right now. And I hope you all make money today. And I really hope that big buyers step in on Tesla today.